So this week was another great week in terms of crypto. Big steps forward in the market, and really the main driver of this, or at least a big portion of this, had to do with institutional money. Another big week, almost $1 billion worth of inflows. And this is big because it gets us back over this $12 billion worth of inflows over the first half of the year. Again, still well ahead of expectations from what we would expect for institutional money. Now, what I want to talk about is the fact that this $12 billion is it's a drop in the bucket. It is nowhere close to the levels that we can reach and likely will reach as we get further on into these products. And I want to explain why this is. So with these 13 F filings that we got much more clarity and insight as to who is getting into these spot ETF products, right? And what they did was they looked at exposure of the top 25 hedge funds here in the US. And what they found was that only 52% of these top hedge funds currently have some of these spot ETF holdings. And some of them range from obviously Millennium Management, 27,000 BTC, which is a very, very large amount, all the way down to 8, which is Bluecrest, which is almost nothing, right? And I don't want to say it's almost nothing, but it's almost nothing in the grand scheme of things, right? And in fact, the exposure of overall from these top 25 hedge funds is only 2.1% of their portfolios, which is a very, very small amount. Now, why I think this is going to accelerate and why I think that this is just a drop in the bucket compared to what we will see is that many people don't understand that many of these hedge funds and institutions either cannot get into these products in the first 6 months to a year or cannot launch one of these products in the first 6 months to a year. This is the pilot program, right? This is the test for the entire industry. This is basically them figuring out how well this product is going to work. Is this going to suit their needs? Do you really think that, someone, for example, that from Bluecrest, for example, that got 8 BTC, do you think they're going to look at this, see the gains that they got over the course of the year, especially as we get later into, alt season and better performance in the market and bigger adoption? Are they going to sit there and be content with their 8 BTC of holdings in these spot ETFs? Or are they going to want to have more exposure? And the answer is yes, they're going to want to have more exposure. We see this asset class really beginning to take off, and it's not just here at home, right? We had the approval of the Hong Kong spot Bitcoin and Ethereum ETFs. We had the approval of the Australian spot Bitcoin ETFs, and we are expected to see much, much more of these things coming. Now, why this is a big deal is, remember, even just this $1 billion worth of inflows over the course of this week, it helped move BTC price about 61K to 66. Obviously, it was not the only thing moving the market. Positive sentiment makes retail dive in and stuff like that. But it is a big, big catalyst for the market that truly hasn't hit yet. We got to see the teaser. We got to see the early impact from it on the way up here, right? It's the big reason why BTC hit a new all-time high before the halving. It's never happened before. And a big reason why is institutional money was buying in heavy, heavy ways, causing major short leverage liquidations. What do you think is going to happen as we get further on into this cycle? It's only going to magnify further. I wouldn't be surprised if this makes up close to 10% of these portfolios, especially as BTC becomes less volatile. And that may not happen quite yet in this market cycle, but I've talked about the fact that we may see less of a drop, post peak. Okay, late 2025 is when I would expect the top of this market cycle, just following the historical pattern that we see. I would expect October. As always, this is not a guarantee. This is not financial advice. But following that peak, it would not surprise me if BTC retraces less, because now you have all this Bitcoin that's been removed from the market. A big, big quantity of holdings has now been accumulated by by institutional money, and that's only expected to grow. And guess what? If they're picking up these assets to hold them, and there's less available in the market, what does that tend to do to prices? It tends to keep them high and in fact push them up higher. All right, that's where things start to compound and get kind of weird. But I wanted to share this with everyone, and I really hope everyone understands the gravity of what institutional money is going to do to this industry. It's going to change it drastically. Like I've said before, we're going to end up somewhere over $10 trillion in terms of the global market cap of crypto by the end of this market cycle, and likely the following one will be over 100 trillion. This asset class is growing at an insane rate, and it's only going to continue to blow up as we get deeper into adoption. So that's what I wanted to share with you guys. I hope you enjoyed the video. Let me know your thoughts below, but have a great rest of your day. Catch you guys in the next one. Take care.